Most gold traders got liquidated at 5,500 peak. We were already positioned 3 hours earlier. This wasn't luck. It was a concept of understanding liquidity grab and change of character before it happened. Here is how we mapped it out on the chart. When gold broke Asian low at 5,310, I gave a warning, stay away. The big players have not shown their hand yet. I was looking for a change of character, a break low of an Asian low at 5,230, but price had other plans. It rallied to the peak, showing that there is a lot of liquidity in the market and hit an all-time high of 5,590. Classical inducement to trap breakout buyers, trap sellers as well, giving the impression that the market will keep buying for a very long time. But we saw it before time. That spike to 5,590 was pure liquidity. It triggered buyers from late traders. Once those stops were hit, smart money had the sell side. Well, they needed. In our audit log, the entry was at 53915, where retail stops and other technical edge begins. I will show you this on the chart. When price was breaking the Asian high to the upside, I gave a warning, stay away. The big players hadn't shown their hand yet. I was looking for a change of character, break of an Asian low, which is at about 5,230, but the price had other plans and it pushed up. It rallied to an all-time high of 5,590. So what did I do? I stayed away all through. I was looking for a change of character, break of the Asian before I make any move. That spike to 5,590 was purely liquidity. It triggered buy stop from late traders. Once those stops were hit, smart money had the sell side. The entry was at 5,391, where retail stops were, and our technical edge begins. The real confirmation came when price broke this change of character. That change of character confirmed that the sellers are taking over the market. I did not jump in blindly. I waited for the retracement back to a supply block. On 5-minute chart, patience is the only way to get a sniper entry like this. We followed the pullback and stimulated a short. Since then, it has been a textbook series of break of structure to the downside. We did not chase, we anticipated the logic. This is the difference between gambling and systematic trading. If you are still lost in this volatility, I put up a 2026 gold checklist in a pinned comment. Don't be the exit, don't be the liquidity. Learn to ride the institutional wave. Watch the next video to see how we apply this in our next gold setup. Until then, please subscribe and like the video. Share your comment, this helps the channel grow.